Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, March 4th, 2020. Take a quick look at the broad markets and then some of the other things that I've been highlighting recently: crude oil, gold, silver, precious metals, things like that. Start out here with QQQ. Mostly consolidation day, although we just broke out on a 1-minute chart. I've been day trading the Qs. I sat back this morning, watched for a little bit, and then had an opportunity, and I posted that on the homepage for a reversal off when the trend line pullback on that uptrend line off the lows on ES was hit earlier today. I'll get to that. So like I said, I mentioned this morning, look, I'm going to leave that stop in place because right now the Qs are bigger picture. Don't get wrapped up in a 3% up day or 3% down day. You can see today's candle is dwarfed by the recent 4 candles right here. This is today's candle, and the bigger picture to me is the market stuck between a rock and a hard place, meaning between support. You have the area I'm targeting down there, that around 196 or so, or 195 or so. Put that target a little bit above there. Yeah, I don't know if you can make it out in the video. There's a blue line. That was the 200 simple moving average, 200-day simple moving average that we hit on Friday. And there's the 200-day exponential moving average, which has done an even better job of defining support and resistance. So support, resistance, that's big picture. That's the daily chart. So anything in between right now for the most part is noise. We'll drill down to the daily charts and I'll show you some levels. So if we can build on these gains, like I said, I think yesterday's 50 basis point emergency rate cut, I'm going to call it I'll call it Powell's folly. Let's call that. I think it'll prove to be a mistake, using up all that much dry powder when you don't have a lot left, but we'll see. And again, does not matter what I think, it's what the market thinks. That's what's important. We have the big old gap, remember, right here, that huge gap from Friday or Monday the 24th, and of course, the top of the gap. If we enter the gap, and especially if we take out the top of the gap, that's going to open the door to new highs because we'll be so close. Usually you get that. So let me show you some levels I've been watching and trading off of today. We'll start out. Let's go to that homepage post this morning. And here's started out here. Mentioned on NQ and ES, we had 2 levels here. You had these little price channels right there, very small, but the more significant line I said right here, you had ES, the S&P 500, a well-defined trend line off the lows from last Friday, and so that was the big one. These are the way it works is the smaller the trend line, the less significant it is. A larger, longer-term trend line will always take precedence over a shorter-term trend line. Short-term trend line give you a little short-term sell signal. So that was a level we needed to take out to open the door for wave down. And I had posted in the same update. I always say this: if you're interested in anything on the front page post, come in, check the comment section, subscribe. You can right here, you can subscribe to any post to receive new comments, because that's where I'll follow up, which I did after the post this morning. I took this screenshot at 10 o'clock Eastern, said, look, we hit NQ and ES had broken below those little price channels, but we hit that more significant trend line on ES, and a reaction was likely. So I was able to reverse from short to long, bounce. But I've had like 4 or 5 trades, long and short, since. I've been trading off the 1-minute charts mostly today. I'll show you that real quick, because we just had a breakout too, so it's relevant. I usually don't cover day trading, active trading stuff. I won't get into all the details, but so far pretty good. I think I'm 5 for 5 on the day with these, but with NQ. So what you're looking at is a 1-minute chart of the Qs, QQQ, just to kind of show you, because I don't have a 1-minute chart of the futures up on this particular monitor. But you've had this trading range right here, right? And that's between 214.21 and 212.20. We've been running up, pulling back. You also had a downtrend line here that was broken out and back testing. So there's a lot on here. I know it's a busy chart, but these are all significant levels. You had a downtrend line, and you have this uptrend line to watch right here. And so of that sideways range right here, this is where it was producing long entries on the pullbacks, objective long entries, and we'd run up there a little shy of that level. On NQ there was better defined resistance, and I would take some profits there. But then just before the video we broke out here. This was a pretty good breakout, and you can see we have resistance up here around 216.20. So went long on that breakout. I'll probably be out of that trade before this video is over. Yep, and out. All right, I just wanted to get a little run up there, and there's some resistance on NQ just above that. Right around here as well, you have a reaction high there. So, but again, this is 3% up day. But when you look at the bigger picture, again, look at the size of this candle relative to the other candles. It's just par for the course now. So 300 or 3% up and down moves plus are the new norm at this point in time. Why volatility is elevated. So volatility cuts both ways. It doesn't mean only downside. All right, so that's it. Nothing more else to nothing much else to talk about on there. We'll see if the buyers step in, if they like the 50 basis point rate cut, and if so, you have the levels to watch. And if they take us out of the QQQ trade, I'll leave that stop there. It's up to you if you want to extend your targets, because there's still pretty significant resistance up around there. One option too is to do a daily close. The only way that really burns you is if we open up around there and then you run up through there and you have a strong rally that day, that takes you way above there. That's where a daily close can sometimes hurt. But what tends to happen is in a volatile market, support and resistance levels get popped intraday. The stops get run and cleared, and only to see you reverse afterwards. So that's what I'm watching on QQQ. You can see it here on this 60-minute chart. We took out that downtrend line. The Qs have been since last Friday in a near-term uptrend, but we're still below this reaction high, so we'll see where we go from here. Okay, and for day traders, we'll check SPY real quick, see if the chart confirms. Coming up on this 216.20 level. By the time this video comes out, it'll probably be over, but come back there, hit that a little short pullback trade to there, cycle back in for a long, or you can always hold it, trail it down. We're up 3%. Let's look at SPY on the 1-minute chart. And again, I usually don't cover day trading stuff, but this is more of a consolidation day, and you can see the same thing. I don't have this one marked up. I've been watching that QQQ chart all day, but here's the levels that we've been bouncing between today. More of an uptrend line, really, right there in SPY. An ascending triangle pattern. So let me delete that line, and boom, we broke out. We started to run. So you get this little minor uptrend line right here. And SPY, you really don't have, that's just a 1-minute chart. There's not a lot of resistance overhead, but I'm favoring a pullback at this point. Come in, back test this level, just shorted NQ, and what I'm doing is looking at the NQ chart. I have some levels on there as well, looking for a pullback trade here. And and I didn't do, I shorted it, pause the video to do that. I didn't set a buy to cover and a stop loss order. Let me do that real quick. Okay, done. Let's see if we can get it at 810.25 right there, just above that previous reaction high, coming around this trend line right here. Let's see if we can get that for the pullback. So that's where I just closed out earlier, reversed it there. Again, that's just day trading stuff. If I can get that one, I think that put me 5 for 5 on the day. But some days are like that, and especially consolidation day when volatility is high. Even though swing traders are not going well, a 3% move is okay, but not much. But again, that's where day traders come in, and when this volatility is high, that's the hat I put on. I'll usually a swing trader, but I'll put on the day trading hat at that time. And there's what it looks like in QQQ. Come on back here. Hit that 216.20 level right there just now. Come on back and have a little, from where we hit it there. That's about, it should be, if it gets there, about, a little better than a 0.5% pullback. So we'll see. All right, next up, I wanted to cover a couple other things. I wanted to do an update on crude oil. As I said in the homepage post, subscribe if you're interested in receiving follow-up comments. And somebody asked about these are the things I cover. I usually ask that you keep chart requests limited to the securities on the homepage under that post for front page posts. Any other chart requests on anything not covered there, post it in the trading room. That's part of the gold membership. Privileges there. I'll give you my 2 cents on any security if I can get a chart on it, and if I have an opinion, I'll give it to you. So on crude, we had a trading op today. I pointed out. Well, first, before we even got there, said, yeah, that crude was falling. We had the weekly inventory report at 10:30 a.m. It comes out every Wednesday, 10:30 Eastern time. They must not have liked what what the inventories came in at, so it knocked crude back down, and it was coming up on that 46.50-ish support level I've been highlighting recently. Highlighted that as a breakout here, and then highlighted that, followed up with this chart saying, that was an objective long entry with these bounce targets. So let's take a look at crude now. That was earlier today. That screenshot was taken at noon. All right, let's look at crude now because I still like it. First of all, I want to point out that the daily chart, and I did point this out last week, I really liked, and crude's rallied nicely from there. This is that major reaction low from December 24th, 2018, and reaction lows like that, especially very distinct powerful reaction lows with a big reversal, are very significant levels, often act as support when tested again. And so that's what we had. And we also had a nearly identical posture. Remember, that was the biggest sell-off in years, leading down to the December 24th lows. And this was also now the biggest sell-off in years, biggest sell-off since that one. And look at that. Identical divergences in scope, duration, everything, clean separation between the lines. So I pointed out that, this is quite the bearish chart. Quite the bullish chart. It was bearish, and it was and still is in a larger downtrend, but you pretty much played out that bear flag scenario right there, or the measured target close enough. Here, those bear flags don't always play out exactly to the measured target. There was your flagging action, a little more. That happens to be about 2/3 of the way down, and then the next thrust out. So, like I said, to me, these moves mirror each other. And, I've been bullish gold since oil, and also treating it, for my swing positions as a hedge. I'm actively trading it in my active trading account, but in my swing accounts, I view it as what I call an indirect hedge against equity shorts. Was long until yesterday and then back short again, but in the swing accounts, that is. And an indirect hedge, direct hedge is if you have QQQ, or let's say Apple, you buy a put on Apple. Now, an indirect hedge is something like this. Crude oil has traded very close and near perfect lockstep with the stock market recently, and therefore, doesn't guarantee that relationship will continue going forward. Sometimes they do disconnect from each other. But the logic being that if the swing shorts that I added back on yesterday start to go underwater because everybody loves the 50 basis point rate cut, then the crude longs are going to go up, or should go up, and probably go up more in percentage terms than the equity market. Again, that's the daily chart. The one I posted, I just showed you on the front page this morning. Let's go to a monthly chart here. Here's 60-minute chart. That's it. Boom. There was, that was a level right here. Mentioned it was a resistance level back then, about 46.50. We hit it, rejected, broke out, ran up there to that 48.50 target, pulled back. So here's what's going on right now in the near term. Oil's consolidating. It's been tradable between this level, and that's why I pointed out today on, any pullback to that, around that 46.53-ish level. And you could put a line, and I will, and I did actually, I think, on that other chart, about in the midpoint, right about here. You can see that's where you also get some reaction. So that's where we hit now. Stock market continues to rally. We could make it up to the top. Otherwise, that's good for a quick bounce trade. Yeah, and I'll tell you what, since I just went short the NQs a minute ago again, after closing that long, I'm going to, close out 2/3 of that position there on a QM in the active trading account. Kind of talking to myself, guys. It's not swing stuff, active trading stuff from the lows today. But there it is. Oh, and bigger picture on crude. Let's say whether the market holds up or not. Ideally, it would certainly help if the market holds up. Here's a consolidation range. It works like a coiled spring building energy. If you get an upside break, bare minimum should propel us to that upside target. An impulsive break above 48.50 should take us up to that 49.63 level, and quite possibly more, although that's pretty significant resistance. So I would expect a reaction there. There were a lot of reactions on it before. It was important support. Once that support gave way, boom. So anyways, I just want to point that out as the next upside target if you are long, if you took crude, whatever, wherever you took it, it, or if you decide to take it. And if you're short, this works the other way. If the market breaks down and has another major leg down, which is still very much a possibility, or I wouldn't have added that short trade yesterday, then crude will probably break down as well. No guarantees, but there's a good chance it will. So you want to watch the recent lows there around 46.50 for a solid impulsive break below. Okay, gold, quick update on gold. The other day I pointed out right here, this is pretty significant resistance at 1650, runs about 1650 to 1655, a resistance zone. I mentioned gold was there pushing up against that. We have a minor downtrend line and a little bit more significant trend line also off the Friday's lows. So I think these trend lines, you're seeing the common theme now. A lot of these securities have, silver. I showed it. I believe if I didn't show you, I'll show you silver. Here's gold. A lot of these securities have the trend lines off Friday's lows, and so now, if the stock market takes another major leg down, gold will most likely break out and rally. However, gold's been holding up pretty well, and if the stock market rallies, I would expect a break of that minor trend line, take us down here, maybe a reaction, and then ultimately a break of this level could drop gold quite a bit more. So that would be the bearish scenario. Again, most likely coinciding with a more upside in the stock market, taking out those resistance levels overhead that I showed you earlier. And then silver really took it on the chin. A couple weeks back, several weeks ago or a month ago, what was it, back here in early February, I highlighted these as bullish, breakouts, long entries on silver and gold. I think it was back here somewhere, trend line breakout, and then that level, and boom, nice rally. And then at the time, I said, look, we had, and it's not shown here, I had to start the chart over. The futures rolled. That's one thing about this charting program. Once they roll the futures, even though I'm using the continuous contract, it'll then erase all the chart, just goes blank, and I have to start the next futures. These are now the May contracts. But there it was. I pointed out that negative divergence and said, careful, I'm right for a correction. Then the correction in silver was more than I figured it would be, but at least, I know some of you shorted, some of you got out, took profits, and boom, what a drop. Came down slightly, undercut the that previous reaction low right there, and here's the bigger picture. It has been walking up since, because silver again got really pounded, so it was more oversold. Remember, gold held up very well compared to silver. So just watch these trend lines. Silver has a big resistance level at 1750. You can see all the reactions here, reaction here, reactions there, reaction there, and a reaction there. So that's the level. Those are the levels to watch. And silver, if it can break above it, there you go. There's your trend line. And if it breaks down, well, I'm going to give you a little bit of support here. I don't have a very strong opinion on the metals right now. Let me just say that, but I wanted to cover them, give you the levels for you guys in those or looking to get into the metals. And Bitcoin, somebody asked me about Bitcoin. The thing is, there are times when I'm covering a security trading something. We had several trades on Bitcoin the last few months. The majority of those were successful and some big gains too. And then that's it. I get in, I get out, and if the charts aren't clear to me, I move on to the next one. I'll keep an eye on Bitcoin, but it could be months, sometimes years that before I get back into a security or commodity or something like Bitcoin. I wait till the charts are set up, my kind of charts where I see a lot. So the story on Bitcoin, I can tell you this: if you're trading it, I don't have a strong opinion where it goes from here, but at 80, I've highlighted this level, 84.45 is support. It was a downtrend line here that was taken out, but there was no umph. We took it out, back tested, but we're still not going anywhere. So Bitcoin's kind of just floundering around right here. By the way, guys, I'm talking fast. Bitcoin futures are BRR. That's the symbol. That's what I'm looking at here. But I can say this, if I had to be long or short, I'd probably go long here for a move up to that 92.27 level, about a 4.5% run if it gets there. But we're in what I call technical no man's land, so I'm not going long right now. Technical no man's land is what I refer to when a security is smack between support and resistance. And your minor resistance would be right here and a break above the recent highs. So that's it. That's why right now I don't have a strong opinion, and I can't make a case for an objective long or short on Bitcoin at this point in time. Okay, QQQ starting to pulling back a little bit more, so working its way down here. Hopefully it gets here soon. Get out and look for the next, day trade before the day is over, if there's going to be another one. And I want to give you SPY traders, what to look at here. There's the 60-minute chart of, nope, that's a 1 minute. Let's get away from these 1 minute charts. You guys don't care about that stuff unless you're a very active trader. All right, this is that big level right here. It's a resistance zone highlighted recently, about 309.57 up to about 310.65, and SPY is testing that now, and that also kind of plays into why I reversed the long to a short just a minute ago. Big resistance right there. If it pops it and pops it with conviction, that was the Powell folly pop right there, where the algos instantly bought when they saw a surprise 50 basis point rate cut, and then it got faded, and we're back at it now. So if they pop it and print a solid 60-minute close, it's going to open the door up for a move to these next potential targets, maybe all the way up here for a test of the bottom of that huge gap from February 24th. As of now, I'm leaning towards no dice, but I wouldn't bet it hard. We have the short trade on Qs. We'll leave it there. Like I said, if they pop it, so be it. We can always get back in if it's a fake, a stop clearing run or a false breakout. And again, I'm looking at SPY here on the 60-minute chart. There's what it looks like on the daily chart. SPY is struggling with the 200-day. That red line's a 200 EMA, comes in right about here, and the 200-day SMA just below. And still plenty of overhead resistance, and this was a lot of technical damage. So I still think there's most likely another leg down coming. It's more so a matter of, are we going to get another pop up a little higher and then go down, or is that it? Kind of leaning towards this way still, despite today's rally. I think, like I said, today is more, to me, just a consolidation day. 3% means nothing when you have ranges like this. Yesterday's candlestick, daily range, the top of the bottom of the candlestick, was about 5%. The day before, we were about, if I can snap to that bottom, there we go, almost 5% as well. So this is the new norm right now. You have to accept that. You have to adjust your trades accordingly. Either don't trade at all, or use wide stops, or be a flexible, nimble trader, or you're going to get eaten alive in this market if you don't know what you're doing. So forget about all this day trading stuff I talk about. If you're not a day trader, plenty of time. I say cut your teeth learning the daily and weekly charts. It's the same principles on the daily, weekly, longer term charts. Trend line breaks, support, resistance, divergences that I use when I'm trading actively on the 1 and 5 minute charts. But you just have to, again, be a little more nimble, because you're leveraged up. If you're going to day trade, you take a position many times larger than a swing trade, because you don't have overnight risk. You're in and out of that trade, trying to go for a little 0.5%, 1-2% move in and out. In this volatility, you can get 3-4% on these intraday swing trades, and you get the right day. But all right, let's wrap it up here. I want to get the video out to you guys, and if anything big happens before the close, I'll do an update. Otherwise, probably wouldn't be a bad day for me to cut out early. But we'll see. If anything big happens, I'll do an update at the close today. But as of now, just watch this. Let me give you a level right there. You can see all these tops of these 3 candles here. That is the wrong drawing tool. You can go away. I hate this tool when it pops up. It's hard to get rid of. There it is, right there, right about here, 309.24. You can see the top of these 3 candles right here, but I also showed you that on the 60-minute chart, right? And that's the thing. You can see it right there as well. So those are the levels to watch, guys. And 60-minute trend indicator still bearish right now. PPO is below the 0 line. Let's see how the day ends, and we'll pick it up from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.